exciting and challenging time for all of us right now, but some constants in life, I believe, will not change. There will always be those with a higher net worth position, and the need for innovation and differentiation in terms of handling this particular client segment also remains a constant. And that's why we thought it would be really interesting to assemble our speaking talent for today to provide what I think will be differing perspectives on what the future has to hold. I'm Andrew Yates. I'm the CEO and one of the co-founders here at Artesian, and I want to start by welcoming you to today's online event. At Artesian, during lockdown and for 2 years hence, we've been busy looking at ways that we can harness the advances in data science and combine that with what you know and the world's best business information resources. And our aim is to give bankers, wealth management, private client professionals, different ways to interact, more opportunities to engage with your clients in ways which seem more natural to them, that allows you to leverage your position of knowledge, not just about your subject expertise, but also knowledge about them and their circumstance. So I'm now going to hand you over to Jeff Courtney, who will introduce himself and tell us what's in store for the next 45 minutes. I'll see you at the breakout sessions in a short while. Thanks for your time today. And as I said at the beginning, if I could encourage you to be on mute and turn your camera on so we can see you if that's feasible. Okay, over to Jeff.
Thank you, Andrew, and welcome to everybody. I think we're going to have a slide here pop up in a second just to go through a few specifics. I'm going to talk you through the agenda today. So I think we've got an exciting hour ahead. A few housekeeping matters as we go through, as Andrew has asked, just Zoom etiquette rules. If you could please use your microphone at the appropriate times and keep your camera on. We can all see each other. Now we're going to kick off with a 30-minute conversation with our speakers. And during that time, if you're able to stay on mute, that'd be very helpful. If you want to put speaker view on Zoom, that might help you, be able to focus on the individual that's speaking as opposed to the gallery view during the breakout. If you have a specific question you want to ask, feel free to send it to me in the private chat function on Zoom, and I can feed that in. After those 30 minutes, during those 30 minutes, we're going to actually have a couple of polls that pop up on the screen. So those will automatically come up onto your screen. You can interact, share your view anonymously, and then we'll carry on through the conversation. After that initial 30-minute conversation with our speakers, we will go to breakout rooms. You won't need to do anything. You'll be assigned to a breakout room. There'll be a facilitator there. And you'll have about 15 to 20 minutes to network, to discuss, to share opinions. At the end of which then, again, you won't have to do anything. You'll be automatically brought back to the full session where we'll go through and share the insights from the different breakout conversations. This initial 30-minute segment is going to be recorded, but the breakout rooms and everything else will not be recorded and will follow Chatham House rules. So hopefully that's clear and helpful for everybody. I'm excited now to kind of move on and present and talk to our guests. And I'm going to kick off with 2 short questions for each of our speakers today. So the first question is, could you just give us a 30-second, 1-minute snapshot of your career, what you've experienced and how that informs your perspective today in this conversation? And then as well, as we all know, it's been a challenging year, it's been an unusual year, but putting that aside, what are you excited about for the rest of the year as we get back into the new school year? What are you excited about, whether professionally, whether personally? What's really got you motivated looking forward to the next sort of 5 or 6 months? So if we could kick off with Matt Grimes, please.
Hi, thanks, Jeff. Hi, everybody. So Matt Grimes. My perspective is I've been in the UK wealth sector for about 27 years. Mainly involved in client-facing roles, business development, distribution, mainly in the UK, but a little bit in EMEA. So my perspective today is very much about what clients are doing, what clients are thinking. And I suppose the big crossover in my reason to be here is that I've known Andrew now for a couple of years, and in my previous years I've been very much focused on business development. So I suppose the big crossover point for me is the use of data in business development and client engagement.
Brilliant, thank you. And what are you most looking forward to in the next sort of 4 to 5 months, professionally or personally?
Good point. I failed at the first attempt, haven't I? Professionally, well, I've just changed jobs, and I've not actually met anyone in my company yet, having worked there for 6 weeks. So I'm right in the kind of pandemic of this kind of new way of working. So professionally, I'm looking forward to physically meeting my colleagues. And personally, I've had 2 holidays cancelled because of the pandemic, so I'm looking forward to going on holiday.
Thank you, thank you. And just a quick reminder, if everyone could please go on mute for this part of the conversation. Thank you. All right, Graham Kellen, same to you. Just a snapshot of your career, how that shapes your perspective today, and what you're looking forward to over the next couple of months.
Hi, everybody. So I'm the CTO of Schroders Personal Wealth, probably one of the largest startups in London, in as much that we're launching with 13 billion AUM, but we're still a startup, so it's quite exciting to be part of that. My career has been generally sort of 20 plus years working in financial services in a mixture of asset management, investment banking, and hedge funds. Generally worked in digital and technology transformation and evangelism. So what I'm expecting and looking forward to over the next 4 to 5 months is seeing how this plays out. And I think a lot of the topics we're hopefully going to talk about today will be centered around what's happened, what's changed, and what's going to stick. And it's going to be really interesting to see what sticks.
Brilliant, thank you. And Brandon, same for you.
Sure. Hi, everyone. I'm Brian Winkler. I'm a partner at Elixir. For 25 years, I found myself kind of at the epicenter of technology-enabled transformation and disruption of industries, including financial services and others. For the past 6 or so years, my focus has been on technology's impact on financial services, particularly around customer experience, business model innovation, and operating model transformation. I work closely with the venture capital and startup communities in Silicon Valley, New York, London, Tel Aviv, Cape Town, and most recently, a lot of focus on private banking and wealth management. In terms of looking forward, what I'm looking forward to, I have to echo what Matt said, getting a bit more human contact into my life. Don't get me wrong, I've always believed in remote working and I've enjoyed it a lot. Especially some of the balance I found in my life with family and getting more exercise and those types of things. But man, do I miss some face-to-face time with people and the emotional connection we create when we engage with people face-to-face. So that's what I'm looking forward to. Hopefully we can achieve that.
Brilliant, thanks for that. And just for my part, I've got to echo that as well. Looking forward to the face-to-face. All right, so let's kick off the conversation here, really where any business conversation should kick off. Starting, with the client. Let's talk about the clients. And Matt, just given your experience and your background, you've got a lot of history, a lot of wealth of experience. But when you look at today, putting aside coronavirus and COVID and the current circumstances, when you look at today and kind of project out 2 to 3 years, so that sort of medium-term perspective, what are the big trends that were probably even happening before coronavirus and will continue once coronavirus is in the rear mirror? What are those big trends that you see when it comes to the client? What the clients expect, who the clients are, how they want to interact, what they're looking for from their wealth management provider or the private bank? What's your perspective on the client trends you see? And which ones do you think are the most important?
Okay, well, thanks for that, Jeff. I had to think about this, and I suppose there's kind of 4 things I'm going to comment about. The first one really is the demand for advice. I only see that growing in the market that we are in at the moment. And I know we shouldn't be talking about COVID, but I think COVID has absolutely sharpened the focus about people wanting to talk about their finances you know, the twin issues of health and market turmoil have really brought those two issues into focus. And if we look at the demand for advice from kind of two kind of broad proof points, one's the macro, one's the micro. So from a macro perspective, you know, the UK wealth market is pretty healthy. You know, I had a quick look. It's 1.7 trillion of assets. It's been steadily growing at single-digit basis over the last few years. The number of wealthy people are growing. The number of advisors in the market continues to grow post RDR. So I think the demand for advice is only going to get larger over the next kind of 2 to 3 years and going forward. I don't see this kind of regression around advice happening at all. And I've been lucky enough to work both in big firms and small, and just joined a small firm. And in my recent period, I have spent a lot of time in client meetings. So it's been interesting to see what's on clients' minds. And I think this kind of the anecdotal evidence of what I continue to see is that client financial literacy continues to be very varied. And therefore the need for trying to make things simple, trying to bring that advice process, that complex advice process to clients is needed more than ever. Products are complex, legislation is complex. So having been in this industry for, you know, I dare say nearly 30 years, this demand and need for advice is just not going away. I don't see it being, if you like, automated in the way that perhaps some might think. Humans remain emotive, client affairs are complex. And just one small anecdote, just in the world of pensions for clients. So pensions are probably the second biggest asset after your principal private residence. I took my first pensions exam in this industry in 1993. I then took another one, advanced one, in 1998. Then 9 years later, I took the rather amusingly called pension simplification exam in 1997. And then just as I was on my gardening leave between the two employers, I decided to retake my pensions exam, which was a basic manual of 450 pages. So when I think about just that one area, it is a complicated area. So as I say, this pandemic, I thought has brought a lot of these issues much closer to clients' minds. So I think my first point is to say, advice as a concept remains extremely important, and it's only going to get more and more important going forward as more wealthy people come into that kind of cohort. Leading on from that, if everyone kind of accepts that advice remains kind of complicated, I think the quid pro quo of client demand is, okay, I accept, you know, advice is complicated, but please, can you make the client experience easier around it? And I think this will be the kind of increasing demand statement for clients going forward. Now you know, lots of people will talk about, you know, the plain vanilla clients who said, oh yes, I can open an ISA, you know, in 2 or 3 clicks on the internet and life is very easy. But actually, do you know there's 6 different types of ISA? And as soon as affairs start to get a bit more complicated, the client experience and all of the things associated with it become more difficult, and they drag the client down. So all of these concepts around onboarding, switching, transfers, transacting, I think the big step change that the clients are going to want is, okay, they accept advice is a complex area, but please make that experience around it easier, less painful, even make it fun going forward. And the other thing is help educate me on the relevant, if you like, parts of my financial world that I need to know about. Quite often we're quite reactive as organizations, so we communicate with clients around legal triggers, remediations, annual statements, and things like that. And I think in the totality of the client experience, people are looking for a much less painful and more interesting experience going forward. Which kind of leads me on to the third point, which is personalization. So if we kind of build the blocks to say, yes, I need advice, please make that experience easy or easier to do. And then the final bit of that, okay, personalize my experience a lot more. And I think that's been driven by a lot of macro factors. And if you think that the wealth management industry itself is very fragmented, what I've observed is the client base has become increasingly fragmented as well. Think about the headlines about, the female population of being wealthy, entrepreneurs, employed, retired, family office. There's been this massive fragmentation of the types of clients that we have in the marketplace. So the personalization of that experience then needs to move on to its next level. And I think the one thing that I am starting to observe more and more across all of those different client segments is intergenerational transfer. Because as we have this baby boomer set of money that washes through the next set of generations, who could be female, who could be entrepreneur, who could be employed, who could be all sorts of different segments, the personalization of that experience needs to kind of move forward considerably, I think, and that will become more and more. And then the final point, I don't know how I'm doing for time, Jeff, but keep me honest. The final point I just wanted to make from a kind of client perspective is a bit of a wild card one. And that's really to do with client sentiment towards cash and debt. So I don't need to tell you guys the kind of history lesson of interest rates, but certainly in my lifetime, I don't think we've ever reached a point that we have now reached now, which is basically the cost of buying and selling money has virtually reached zero. And therefore, what is that going to translate into in terms of client behaviors, client needs over the next few years, where most of us believe that the chances of the cost and benefit of buying and selling money is really not going to rise at all. And that affects multiple layers of affluent savers, high net worth individuals, ultra high net worth, fund managers, and the way that they think about strategic asset allocation. And then the same on the other side of the balance sheet with debt. We are more indebted, and likely to be so, than we have ever been. I come from a generation where I was told to repay my loans by the time I retire. But are we now moving to an era where we're just going to be managing debt through generations? So our whole kind of behavioral psychology around cash and debt, I think, is going to be quite an interesting play out over the next 3 or 4 years. So in summary from me, Jeff, I think financial advice, the demand for it's going to grow and grow and grow going forward. I see no reason that that's going to fall away. I think the whole client experience that people are going to demand needs to move up a level. They're going to be very much more demanding. And then the follow-up from that is this personalization through the multiple client segments. And then the wild card from a kind of product or asset class perspective is cash and debt. I think psychologically, we may be moving to a different place. Those are my thoughts.
Thank you, Matt. That's brilliant. Now, I want to move on here in the conversation to Graham. But just before we do that, if we could put up, there's a poll question, I think, here. If we could put that up for the audience. Yep, there it is. Give everybody a couple seconds to work through that. So Graham, off the back there of Matt's perspective around the client and some of the big trends and how they relate, that doesn't make it any easier for the actual business to deliver on those expectations, to navigate those. What do you see then? How are organizations reacting to this? There's margin pressure, there's cost pressure, there's increased expectation from clients. What are the priorities? What are the trends? And really, I think, interestingly, how are you thinking about this from the business delivery perspective?
Well, I think Matt raised some excellent points, and to echo those, I think that absolutely we are seeing a generational transfer, absolutely. So I think that the client expectation is absolutely key. I think that many of the organizations that will flourish in the next coming years will be the ones who really get what client experience is about. And that isn't quite rightly about a purely digitized interaction, although the recent months have increased, multiple times the amount of effort that has gone into digital interactions with clients, be it teleconferencing, videos, digital signatures, all of those things that we sort of nudged along years ago and are now, fully absolute hygiene factors, not just nice to haves anymore. I think the other element is, as financial planning and financial advice demand increases, but through different demographics, different sectors, the way that we have to interact needs to evolve. I think that one of the great things about being involved in wealth management is this is an industry that has been, rightly so, very relationship focused, very much about a personal touch. Is how do we recreate that in a way that appeals to a new generation or different sectors that had never been contacted or worked with before? So I think some of the key themes that will mean that organizations survive is the ones that can actually develop strategies around that. And that means true CRM, true omni-channel marketing, and proper targeting, hyper-personalization, as Matt said, about how you actually communicate with people, how you understand the goals and the objectives that they're trying to achieve, what stage of life they're at, and then how you remove all of the friction that generally causes people to drop out of those funnels. So it's very straightforward. If you have got this high demand, you should be shooting fish in a barrel almost. But how do you actually get them to follow through on that? Because people don't like talking about money. People don't like all of the effort that traditionally has gone into getting a wealth management and advice and financial planning, into something that you can actually understand. How does it affect you? And I think certainly us as an organization and many others are really thinking about what can we learn from fintechs, what can we learn from other sort of big techs where they've reimagined and re-engineered entire processes to try and be competitive. You can think about margin pressure, absolutely, but if that advice is going to increase, it's how do you, as the industry becomes more and more competitive, how do you succeed and how do you reach those clients? I think that's probably one of the biggest trends, and I think that the recent events over the last few months have really kick-started that process with a new acceleration and new energy that I think people have never invested before.
Great, thank you for that. And in terms of how businesses are thinking about approaching that, and just your thought process, do you see these as incremental, step-by-step changes in very tactical domains, or do you see organizations making big, bold bets at this time, despite the uncertainty? Do you see partnerships emerging as a bigger factor, or do you see organizations becoming much more specialized in their own propositions?
Well, I think the appetite for innovation and working in new ways and clients wanting to interact in new ways has had a massive shift. I think most organizations have seen 90% of their staff now having to work remotely. So those big bets suddenly feel a bit less scary because we've had to make really significant changes into the way we operate, the way we work, things that have seemed incredibly hard to get through legal or compliance or whatever people's inhibitors were for moving in this direction. Suddenly clear pathways have emerged. So I think that you may see more big bets, but I think that in an economy in which we find ourselves, I think those are going to have to become more sure things before we actually move on them. So I think inevitably you've got to look at pushing that cultural change even further than the one we've just experienced, and trying to get people to be more comfortable being able to use hybrid delivery of services with high digitalization that don't take away that human aspect that is so important. You know, you're dealing with, as Matt said, very complex financial situations where people want to be assured and they want the worry of their financial future removed. That can't be done purely by an algorithm. So it has to be a significant cultural change, which inevitably will mean more incremental shifts. But I think the rewards and the paybacks will become so obvious that that will start to accelerate.
Brilliant. Thank you. Thank you for that. And I think we've got another poll question here to come up. So what is the single biggest business trend that will impact wealth and private banking over the next 2 to 3 years? Got digitization, challenging business economics, partnerships, innovation, or other? Okay, I think so. Hopefully everyone's had a chance to respond there. Brandon, there we go. We've got the
Results.
We've got the results. So yeah, it looks digitization and challenging business economics are vying there for first and second place, with partnerships and innovation behind them. Brandon, from your perspective, you work across a number of clients. How are wealth and private managers looking at that horizon scanning activity? How are they thinking about innovation? How are they creating the space to experiment, but also, you know, as we've just heard, keeping that focus on things that are sure, because now is the time that you really need to prove on the advice that you give to clients. You need to build on that trust. How do you see organizations balancing that need for, you know, consistency in the moment and, you know, current state, and innovation and horizon scanning for the future?
Yeah, sure. Thanks, Jeff. And yeah, I really I'll try to touch on some of the points, really good points that both Matt and Graham made during their talk. I think the ones that are doing it best have organized their business into, I'd say, 4 zones. Each zone having a different objective, different performance measurements, and a different way of working. And I've been very inspired by Jeffrey Moore, who outlines this concept brilliantly in his book, Zone to Win, which I think everyone should read if you haven't read it. These 4 zones can be divided, first of all, into 2 major categories. One is sustaining innovation. So a lot of the stuff that we talked about there about improving customer experience, client experience, and, you know, continuing to do incremental change is in that sustaining innovation. And then it's the more disruptive innovation space. So under sustaining innovation, you have what I would term a performance zone, and what Jeffrey calls a performance zone, where the ongoing focus is to deliver more revenues, more profit within the fiscal year. This is the zone where most of our people live and work every single day. But that's one of the zones, and it's got very established ways of working and performance metrics associated with it. Second zone under sustaining innovation is the improvement zone. So this is the home of continuous improvement, where the focus is to deliver a better client experience, efficiency, effectiveness, compliance. Typically, both of those are within, you know, a 1-year horizon. In the more disruptive space, this is where I think people don't always have something set up or something mature enough set up. You really need an incubation zone. And that's where you have your horizon scanning, your portfolio of experiments to develop, test, and validate your hypotheses around what the future will bring. That's the zone where small, dedicated, cross-functional teams leave their day job to work in rapid iterative sprints. And those experiments that prove to have legs go on to become the green shoots for new propositions or entirely new businesses. These projects typically have a longer 3 to 5 year horizon, and a strong tie to technologies that are emerging that are enabling that change to happen, those waves that are coming. And finally, I'd say there's the transformation zone, which is the most disruptive zone, because when you're transforming something in your business, it's it sucks a lot of energy and resource across your business and away from some of the other zones. And for that reason, this zone is not always active, as you shouldn't always be transforming your business. It's usually something you do maybe once every 10 years. Projects that live here are either defensive in nature, it's critical responses to moves from competitors or bringing a sick business back to health, or offensive in nature, where you have disruptive propositions or new businesses that have scaled out of the incubation zone. And these projects typically have kind of a 1 to 3 year horizon. Across all, so that's kind of the mental model where I see people who organize to be able to capture success in each of those areas, all of which are critical. They kind of have some kind of a model that's set up like that. I do believe that in all of those areas, there's an ongoing engagement with technology, with startup community to understand how things are emerging, because the technology advantages can apply to many of those zones, particularly the improvement zone and the incubate zone. So that's an ongoing and a key part of it and a key ingredient to it, if that makes sense.
Brilliant, thank you. And are there a couple of things that you've seen where particular technology or new type of proposition or operating model is really coming to the fore in terms of getting attention from different wealth managers and private banks? Are there a couple of specific things that are already emerging in terms of to use your language, green shoots over the next that would seem to be the front runners over the next couple of years?
Yeah, I think Matt talked about it. I think the personalization side of is really important. So you talked about, Matt, I think you talked about women. So you look at a startup called Elvest, which everyone knows about, that's nailed that proposition. And so much so we've recently talked to some of their investors, and not only are they attracting women, they're starting to attract more men, because not only are they've built a great proposition for women, it's also a great client experience. Obviously, there's been tons of focus on the next generation. So the Henrys, the high earners, not rich yet population. So there's been a lot happening there. Some other things that are happening that we see is platforms around impact investing, social purpose, theme-led investing. And this again goes to the personalization, Matt, that you talked about. And then there's been a really interesting movement of alternative investments. So whether it's real estate, art, classic cars, the Yield Streets, Rally Roads, Otis, Cadre, Roofstock, Cartas, Forge, those types of emerging plays. And that's more on the proposition side. More on the operation side, as Graham talked about, it's digital onboarding, e-signatures, digital PFM tools, real-time account aggregation, payment integration with open banking. Those are the kind of the key kind of client experience and operational things that we've seen.
I'd also add in there, if it was okay, one of the great themes, implicit in what I was saying, is about sustainability and ESG. But one of the challenges, I think, for us as an industry is, and investment management too, is the management of our data. I don't think as an industry we've particularly managed our data particularly well. And I think that part of what we've learned from big tech and fintech now is that data is a real asset, and we need to get better at organizing it, because you can do ESG, but you can only do it properly if you have the right grain of data. And that's a real challenge for most wealth managers. So certainly that's one of the big themes, I think, in that digitization window, is we're getting serious about how we organize and manage data. It's not just about the client experience. It's about how do we internally digitize what we do and get much better at it.
That's brilliant, thank you. And just to, I don't want to read anything into it, but it sounds like you're talking about data, both from the opportunities it generates when you do it well, when you manage data well, as well as being more compliant and having everything buttoned up, and providing a more coherent proposition. Thank you.
Yeah, I mean, I think, to be fair, I think everybody in wealth management has held client data completely sacred. So I think that's never been a problem. I think it is the underlying investment information. The grain of data that a wealth manager is often very different to what a hedge fund or an investment bank has. So I think getting those disciplines, those sort of techniques and technologies in, is going to be a key differentiator going forward.
I would agree. Just to add to that one really quickly, we're seeing some very early stage emerging players start to try to bring hedge fund-like data to wealth managers and clients. There's definitely, it's pretty early from what I've seen, but it's definitely happening.
Fantastic. Okay, so let's move on to the final poll here before we then move into the breakout groups. Will innovation be a decisive factor in determining which wealth and private banking businesses succeed in the next 5 years? Not really, maybe, very likely, and absolutely. And we'll give everybody a couple more seconds. There it is. I think very likely is a clear winner there in terms of that perspective. Brilliant. So, so hopefully you found that really insightful. We've got that client perspective and the client trends, how that impacts the business and how the business response, and then the innovation and horizon scanning perspective. Now's your time to have the conversation, to share your thoughts, to ask your questions. So in a moment, assuming everything is going to work perfectly smoothly, you will each be introduced into a private chat room with about 6 or 7 other people for the next 15 minutes or so. You won't need to do anything. That should happen automatically. And then after that period of conversation, you'll be brought back. We'll share some of the insights discussed in the breakout groups, and that will conclude the session today. So with the magic of Zoom,
face to face, is Zoom the answer to that? Can we suffice? There's still that need for the human touch. And the winners, one of our speakers eloquently put, with the hypothesis-driven organizations that could execute at scale with a hyper-personalized proposition. And he looked towards the recent announcements around ESG as a good guide towards that. So hopefully I did our group justice, and hand you back to Jeff. You're on mute, Jeff.
Great, thank you. Thanks for that, Andrew. And Matt, from your group, will you be sharing, or will someone else be providing the summary?
Yeah. I'll do it on behalf of us, Will, yeah?
Yeah, go for it, yeah.
Yeah, so I mean, the time shot by. I think the one point that came out for me was listening to Billy, and I hope he won't be embarrassed by me talking about his experiences. He's just joined the industry just over a year ago, and he finds our industry clunky, slow, and on a different scale to many other industries. And I think that kind of underlines the point that Andrew was saying, is that this whole bit about advice, I think, is one part of it, but client experience is something else. And I think there could be some real step change around creating better client experience, but the problem the industry still has around regulation, all the stakeholders we have to manage through all that process, is the actual advice process that we've had layered over many years of regulation, products, and the way businesses are kind of set up. So for me, it's coming back to try and separating those two out, because I think the advice one is quite a difficult nut to crack, whereas I think the kind of experience around it could be could have some absolutely turbocharged change over the next few years.
Thank you. That's a very nice distinction. Thank you. And when I know we have 2 other groups here in terms of feedback, who would like to jump in?
Yeah, our group had a really stimulating conversation. What I'm going to do is, I know I won't do it justice. I might shoot over to Tim to share some of his thoughts there, and specifically around costs. It's something that wasn't touched on beforehand, but he had some really interesting points. Tim, would you mind giving an overview?
I need to get off mute. I didn't realize I was going to come in here. Yeah, I think the costs are probably one of the biggest things facing the industry in the next 2 to 3 years. I think that the intergenerational transfers already in play. We've got a sandwich generation. I think that'll play in with regard to intergenerational wealth as to structuring and planning. I think that there are less advisors in the age profile of the advisor is quite old now in the industry, and it's good to hear that Billy has joined the industry for a start. I mean, it's good to have some young blood coming through. I think the industry has always spurned individuals as opposed to teams, and I think that the industry will benefit from a more open view. I think, you know, one of the things we have to look at is when we talk about intergenerational wealth, I think we have to think about the generations as well. You know, the millennials buying is different than in Generation X, for a start, and then the baby boomers obviously are passing it down. And I echo what the speakers were saying, whereby there will be a demand, an increase in demand for advice, because structuring, and I think COVID's probably done this, accelerated it from a point of view of intergenerational transfer. Advice is far greater. The conversations are far greater today than they have been pre-March the 23rd.
Brilliant, thank you for that. And then we have the fourth group, Matt Elsom. I know you're facilitating a group. Will you be sharing, or will someone else be sharing for your group?
Sure, I won't suddenly drop it on someone. There were some really interesting observations. Harry did point out his organisation run technology for St James Place, and he pointed out that many of that there have been innovations that have really moved through quickly during the time of COVID. So there has been some of that, but the group seemed to agree that innovation is not so much about product, but more about the experience, the way we can enable clients to interact and do what they have to do for the product. It was Nathan helpfully pointed out, though, that is hampered by regulation. And much as we want to bring excellent digital experiences to clients, or to the clients that want it, regulation makes some of that difficult, and there's a real balance there. Hugh made a really interesting point that he sees digital as a tool. In this industry, he doesn't see it as a cost-cutting measure, as digitalization has been in banks in many other product areas, but here it's a tool that helps you to say that we can do this over the internet, or I can come and visit you, and it just enables someone who's advising to give their client more options. And I think it was Luke who said that. Hugh said something really interesting, just to override all of this. In this industry, the market and innovation moves very slowly. So whatever we think we're going to do and whatever we think is going to happen, just remember, in this market, things move slowly.
Great, thanks for that. Thanks for that. So this brings the overall webinar to a conclusion. One, I want to thank you for your time. Thank you to Artesian and to our three speakers, Matt Grimes, Graham Kellen, and Brandon Bigler. Thank you for putting in your experience and your thoughts and sharing that with everybody. Hopefully you found this of interest, and just sort of in terms of wrapping up, it truly is a fascinating time. Putting COVID to one side, even though it has been an accelerator, there's some profound trends in how clients are changing, the client base is changing, client expectations are evolving and changing, levels of sophistication, what people are looking for. It's truly extraordinary. How to deliver on that, both the making things simple and easy where they should be, providing the rich depth of advice where needed, and enabling the business to deliver on that is not easy, it's not straightforward. I think sets the scene for the challenges in the next coming years. I think as has been discussed, innovation will absolutely be a part of that, but it will not be the driver, because at the end of the day, it has been and will be about the human-to-human relationships and contacts over the years. So hopefully you found that interesting. The recording will be available, and then we'll have a write-up of this as well. Thank you again for your time and for sharing it this last hour with us. So thanks to everybody.
Thanks, everyone.
Thank you.